Google, I mean, missed estimates, but overall, there was a lot of positives within. It's down like 3-4% today, but still down 4% after coming down a lot already. But I saw a lot of positives, but let's talk about Google and start there.
Yeah, the only thing that stood out to me is the $70 billion buyback. Now, I was going to run a screen and I'm lazy, so I apologize to everybody. It's very unprofessional. I have no idea how many companies are worth $70 billion, how many companies are going to do $70 billion in sales, just revenue over the life, let alone per year. Couple that with Frank, they have that in cash. I mean, these tech companies, we've talked about the difference between just growth at all cost and high tech, high flyers and actual great tech companies. What I'm looking at Seeking Alpha, the forward PE for Google is 20%, forward PE is 20. Earnings and everything are growing at 23%. Margins were 30%, which is flat year over year, which is terrible in a sense. I'm being tongue in cheek there. And they have $70 billion that they're just going to buy stock back. This is a stock that is sold off. I don't know when it will turn, but I don't see, I think you can buy the big tech like this and not have fear over the next few years. I think money will flow to these companies as you look for the best place to hide. I'm not saying it can't move lower, but I didn't see anything that would jump out at me it scratches my head on why it's 4 or 5% down, I'll be honest.
So this is the reason why we pay a lot for these search engines and stuff like that and different things where we have, Capital IQ and things. So I'm trying to bring it up as fast as I can. I actually have a, screen here because I'm trying to figure out how many stocks actually have that. So I'm going to view all of them and see if I get market cap here. But if I had to guess, it's like less than 50. And I'm just bringing up the screen because I can usually do this pretty quick. But I think I hit a wrong link here.
And real quick, while you're looking at that, interrupt me whenever. But the bullet points here, Google advertising was up 22% year over year. And remember, these aren't easy comparables. I mean, it's not like Google hasn't had a great last couple years with the coronavirus and all that kind of stuff and lockdowns. I know YouTube missed a little bit, but revenue, YouTube ads was still up 15%. The cloud grew 45%. I mean, these numbers are almost just laughable when you think of what the market cap is 1.7 trillion.
Yeah.
These are fantastic business models. I don't agree with a lot of stuff they do and all that, but from a pure stance of businesses, these are great. And like I said, if you have any type of long-term outlook, I don't see a problem with Google here. That's just me. But if you bought it 2 months ago, you're yelling at me because it was almost 3,000 a share. Now it's 2,300. So,
yeah, I mean, there's like 100 companies, 70.
Yeah, I mean, they're just nuts. Them and Microsoft, Apple, they're all in just different leagues when they have that kind of cash, that kind of earnings power. It's incredible.
It really is incredible. And what stood out to me, look, I mean, you have one, there's a few things. So, I mean, Google advertising, which is their core business, was up tremendously. That's up 22%, which is a great number. $54 billion for the quarter just for advertising. YouTube ads, YouTube got crushed. Not crushed, it's up 50% year over year, but it missed by I think over $1 billion it missed by, which is really big. And you're looking at that stock repurchase, which is used $70 billion, operating margins flat. And their earnings missed estimates and their guidance was okay. But for me, you have to look at certain things. And we talked about this with Netflix, because if Netflix, with Russia operations, it's really cool for a company to say, we hate Russia. We're not going to do business with them. Okay, that's cool. That's cool from your ethical standpoint. It makes you feel good about U.S. It's terrible for investors, right? Because now, it's not being factored in earnings. And it's not. And you saw that with Netflix, because Netflix was supposed to add 2 million and they wound up losing, which is terrible. But if they included Russia, because they decided the same thing, not do business with Russia, it would have been a positive net add, which would have resulted in that stock going down 15% instead of 35-40%, which is down. Now you're looking at Google as well, blaming, hey, Russia operations, that hurt us. Again, that's one of the things. The YouTube thing is, listen, that's TikTok. And also YouTube is an app, right? So yes, it's Google and Android, and I get it. But most people, 50%, we talked about this yesterday, 50%, around 50% of people own iPhones, and their median income is $80,000, which is, a lot higher, 40% higher than the average. So, when it comes to advertisers, and that market is great, but a lot of people have iPhones in America. And when you do, that app is subject to Apple's private policies that you have to check a box and stuff like that. So you're seeing that impact the YouTube portion of the business. But also the Russia operations, keep close eye on that, because a lot of companies that said, hey, we're not doing business in Russia. And you might think, well, Russia is such a small part of it. Russia, and we learned this from Visa, which reported good numbers. That stock's up 10%, which, they blew out the numbers. But they are the second largest company in terms of credit card usage. I didn't know that. That's pretty amazing. But that, you're shutting down operations in Russia. It's going to impact. And you're talking about impacting where Microsoft, you know how much, Daniel, it had in Microsoft, the Russia operation shutting down? 1 cent.
1 penny.
1 penny. That was it. That's it. So if you're looking at Google, obviously bigger. If you're looking at Netflix, bigger. So, a lot of these companies, especially streaming, right? They just want names on their list. This way they can say, we have 150 million new people. They're not going to look at average revenue per user like Disney, which is, like $4 compared to 20, right? Nobody cares. Compared to $14-15 for their competitors. But when you're losing Russia operations, you're going to lose a lot of subscribers, even though it's not a lot of revenue. And that's a big number when it comes to streaming services and a lot of other places. So you have to keep an eye on that when you're at a very expensive level in the market. When stocks are trading at premiums, which we've seen this come down a lot, when we're seeing different market conditions where it's a bear market, this is going to result in companies missing estimates. And I don't know if that's really factored in because it's not factored in with Google based on the estimates. No, we had Google missing. But their core business is great. Their core business is going to explode because now when you're looking for advertisers, they only care how much they could track. And before Apple came out with private policies, they were allowed to sit in your bedroom and basically know everything that your kid's doing, everything all day, have access to everything, your lives, everything. And then Apple said, okay, no, right? Let them check off a box. A lot of people don't check off that box and let people just track them, whatever they want to do. Google's different. They have their own operating system. So you can't, if you're going to go to Facebook, Facebook is reliant on that app, right? So, and that's going to impact Apple. You see Snap. You look at all these companies, Google now is the platform that everybody's going to go to because the advertisers want to be up your you-know-what and know everything you do, no privacy issues, because that's how they generate the largest return on ad spend because they know exactly what you're doing, when you buy, when you're likely to do everything, travel, whatever. That's going to result in a lot more business going to Google. So Russia operations hurt. YouTube came down more than expected. A lot of that is TikTok as well, which is, impacting a lot of these social media companies. But those are the biggest takeaways for Google, where I think it's mostly a buy here. However, it seems like YouTube was a surprise, which it shouldn't have been a surprise. And the Russia operations were a surprise, which tells you that Russia and a lot of these companies, they're reporting earnings like crazy over the next couple of weeks. Remember that. Any of these companies that have exposure to Russia, take a look because the analysts are behind on this and they're not including that in their estimates. And that's the only number that matters. Whatever number's on screen, you don't have to know how much it grew, it's the analyst estimates that are on TV when they say they beat this analyst estimate or they didn't beat. And they didn't beat because a lot had to do with Russia, which the analysts should have got right, but they didn't.
Yeah, absolutely. And they even warned, and good for them, management even warned, hey, Q2 results will show more of the Russia effect on the activities. The thing that stood out for me from the conference call, a couple of highlights were the hybrid work is here to stay and the company has products for that trend. I say that because that is stating the obvious. Hybrid work is going to be around to stay. But think about how that, and we can talk about Microsoft, Hewlett-Packard, Dell, all these other companies, semiconductors. If you have this hybrid work, either you're sharing products, computers and things, or you're buying multiple ones, which means the recycle every couple years. That's a steady demand for that home office, home office and actual office. And I think that's pretty neat on how they kind of target that and explain that. So you can take that, as you often say, hey, when you read the Wall Street Journal or newspaper, don't just think about what stock they're talking about. Mm-hmm. Think of the industry, think of the sector. So that hybrid work is going to be something that you can look to invest in and take opportunities in for years to come.
Now let's turn to Microsoft, which is, you're not going to find too many companies that are going to report a better quarter than they just reported. And that stock is down as well, right? And this is what happens in bear markets. A lot of the good names get hit. So 100 million.
Sorry, Microsoft's up. It popped 5%.
No, but it's down.
From
its highs, right? And it went up on this, right? So I think Chipotle's up. You're looking at Google's down. Boeing's getting crushed today. But Microsoft's one of the ones that are up today, but still it's down a lot from its highs. Now, the number of Azure deals, which is their cloud platform, 100 plus million, right? So 100 million plus. That doubled year over year. If you look at, there wasn't any negatives. There was zero negatives. It's not like anything happened that was negative. You look at, even Office 365, LinkedIn, record engagement, taking market share in gaming for 2 straight quarters. Where'd that come from? So, you're looking at market share gains in PCs, gaming consoles. Edge browser is taking market share. You're even Edge and LinkedIn. I mean, and PCs, really? The Surface? I mean, you're looking at Microsoft's products saying these are the 3 that are taking market share right now. And then let's get to the cloud, which is growing 26% to $19 billion. To put that in perspective, we have Google doing... a couple billion a year? So Google Cloud revenue is $5.8 billion. You're looking at Microsoft is $19 billion, just to put in perspective. This is a high margin business. I don't know why Google is doing that much in cloud and losing $1 billion a year, which is weird. I'd like to look at the numbers a little bit more. I understand you're growing, but this is an incredibly high margin business. But Microsoft has it right, Amazon has it right, and it's growing incredibly, 26%. Strong outlook. Again, the presence of Russia was nothing, impacted earnings by 1 cent. $20 billion in free cash flow. Are you kidding me? I mean, that's what we should run a screen. How many companies have $20 billion more?
Right.
Or they have $100 billion in cash on their balance sheet. Even that, $100 billion in cash on their balance sheet, which allows them to buy almost any company S&P 500 outside the top 40, 50, maybe 60. So when I'm looking at these numbers, and also they increased their headcount by 20% year over year, mostly for cloud engineers and increasing their sales force and stuff. But overall, I mean, holy cow, this is an amazing quarter.
Yeah, and the gaming, like I said, the crazy thing is when you're comparing to tough previous quarters, so the tough comparables year over year, gaming to continue to do well because the lockdowns and all that pull forward there. I mean, Take-Two, we've talked about a lot in the past, Activision, which got bought out. But, I mean, just to see the growth and the margins on that side and the continued of just a sticky product. I mean, when people buy these games, Call of Duty, Xboxes, whatever, that's just incredible. And that also plays into the bigger, gaming is kind of the future and all kinds of, from cryptos to metaverse and all that stuff. But yeah, I mean, when you have massive corporations with tough comparables and they still put up amazing numbers, here's the gray area. You have amazing companies with returning on capital, and yet their stocks are 20 to 30% off previous highs. Doesn't mean it's terrible. It just means to reallocate your thinking and expectations because, like you said, we're in more of a bear market, not a bull market, and just pay attention to that. So you got to continue to be patient. You can buy these down here, in my opinion. But again, unless you're trading, you want to know that you're going to withhold these for a while, in my opinion, several quarters, a couple years, because they're going to ebb and flow. But as long as the core numbers continue to be positive, remember, at some point we're going to go, everything is going to be moving together down, and then things are going to matter. And that separation will be good for the leaders.